Hey, what's up guys? I'm Michael King, back again with another video. So today's video I'm going to analyzing the GBPUSD, and as you can see, this is the GBPUSD on the monthly time frame. So now if you look at what is happening in price currently, looking at the bigger time frame, this was the high, and at this point this was the low. You can see that this low was broken right at this point here. So that established what a bearish trend here in GBPUSD. So price broke below it, went all the way up here, came down, went up, but was not able to take up this high here, then went all the way down. So overall in GBPUSD, we're looking at the bearish market. But if you look at what is happening within the past 4 to 5 months on GBPUSD, you will realize that this was a low right here. We're not looking at the overall trend, but we're just looking at what is happening currently. This was a low right here, and you can see price broke the low. So it means in between that overall bearish pattern, we also have a change of character here because of the fact that price has been going up. But you might be wondering, like, what is making price to go up? Looking at this data, price was going up because of the fact that I was trying to fill this fair value gap right here. So as you can see, this was the reason for price going up, and also have a order block right here, and price traded into it, as you can see, for price started heading down. So this fair value gap and this other block is responsible for pushing price down. And if you look at what is happening currently, you realize that price broke below this level right here, establishing the confirmation of price willing to go down. But if you look at what happened right here, price is going up. Now you might be wondering, what exactly is making price to go all the way up? Well, the reason for price going up is price trying to fill this fair value gap that we have right here. So this fair value gap that we have right here is the reason for price going up, and this coming week or the next 2 weeks, I expect to start seeing price trading lower. Now you might be wondering, that being said, how do we trade GBPUSD this week? Well, let's start with going to the weekly time frame so we can establish our high and also our low. So now from the weekly time frame, what I'm going to do right now is I'm going to draw a line for our high, also going to draw another line for our low. Now I'm just going to make this color to be black. I'm going to make use of the color black. Then I'm going to make the line a little bit bold, since we're trying to look at that from the bigger time frame all the way down to smaller time frame. So I'm just going to make it a little bit bold. Perfect. Then I'm also going to draw another line for the low. Now this is something that you should always try to do as a forex trader. You're expected to take note of the highs and the low on the bigger time frame. I'll have made use of the monthly time frame, but I'm just using the weekly time frame so that we can have a little bit of more candles actually, because if I'm to use the monthly time frame, we might just have like 2 to 3 candles. So I'm just trying to use the weekly time frame so we can see more price action, right? So now this is the high and this is the low. So now what I'm expecting price to do is I'm expecting price to go all the way high to our OTE, and you might be wondering, what is OTE? Well, I'm going to explain better for you. Now this is our Fibonacci tool. I'm going to connect it right here and connect this right here. So now I'm going to zoom the chart a little bit so you can see clearly. Now looking at what is happening right here, prices have broken the equilibrium right here, that is 50 level. Price is currently at 62 level, but I still expect price to still go all the way up to this OTE. OTE means optimal trade entry, which is usually in between 62 level Fibonacci retracement and 79 level Fibonacci retracement. So in between the equilibrium of that is half the midpoint of 79% and 62% is called the optimal trade entry. So I expect price to still trade all the way up even to 79.0, that is 79% level. But you might be wondering, why exactly do I feel price might? As we all know, no one can predict accurately how the market tends to go, but I feel in probability that price might want to get to this level right here, and I'm going to tell you why I feel price might head here. So now I've drawn a Fibonacci tool. I also taking note of the high and the low. Now let's come to the daily time frame so I can show you why I feel price might want to trade up there. Now if you look carefully, we have on the daily time frame, we have a fair value gap right here. It's not really big, but it's something that we can still take note of right at this point here. We have a fair value gap, and I'm just going to extend it all the way to current price level. Then I'm also going to make sure that it's accurately drawn. So the high of this candle is at 1.30414. So I'm going to take note of it. 1.30414. Then the low of this candle is at 1.30509. So 1.30509. Yeah. So now I've placed it. So now I feel price might want to go all the way up. If not to this fair value gap, this might be where price likely to head towards, because of the fact that what you see here, we have a order block, right? So these up close candles in a bearish market is what we call order block. So price might want to trade into it. So what I'm just going to do is I'm also going to highlight the order block. I'm going to highlight it. Perfect. And extend all the way to this point right here. So now what you are seeing right now is price likely to trade to this order block you're seeing. As you can see, it's around the optimal trade entry and it's at 9% level. So price likely to get there. So what you're just seeing right now is I'm trying to point out two places that might be a turning point in the market. We have this region right here, but if price ignore this and keep heading all the way up, this right here might be the last you should take note of. Now if I should come to the 4-hour time frame just to have more clearer view, let me decrease the chart a little bit. Let's try and see what price is doing around currently. Perfect. Now if you look at what we have here on the 4-hour time frame, all these up close candle, these other blocks that we have right here, price hasn't traded up to it. As you can see, price haven't gotten to it. So price might want to use here as a liquidity sweep. Like price might want to clear this place and head all the way up to this level right here before price start heading lower. So now this, like I said earlier, are places that I feel that might want to reverse price. So if we are having an idea, okay, that price is likely to still head a little bit higher before we start seeing that reversal in line with the monthly time frame. Now how do we trade moving forward? So in order for me to explain how I'm going to trade moving forward, I'm just going to delete all this so we can have a clearer view. I'm going to do this Fibonacci tool. So now I usually use the 1 hour time frame for entry points. Doesn't mean you have to use 1 hour time frame, because at the end of the day it's preference. Now if you look at what is happening on the 1 hour time frame, let me first try and bring it down so you can see what we're looking at. So we're looking for buy setup until price gets to this region before we can move to the sideline and observe to see what price is going to do. But from this current price level to this point here, we can still be able to still trade and get up to like 70 to 80 pips. So now moving forward, tomorrow, which is going to be a trading day, we might see a little bit of retracement. We have some fair value gap we can take note of. So now looking at this right here, this is a fair value gap here, which we might wait for price to trade into. Then a reversal that is to the upside, a continuation pattern will be what we are going to up into to trade and target that place we pointed out on a daily time frame. That is this level right here. But now if you are able to see a buy setup around here, this fair value gap is a good target. But if you don't want to trade this fair value gap, when the market forms, when the market is open, it might give you another entry that you go up into and trade. But when price gets to this point, don't just be in a hurry to sell. There's one thing you have to look out for. You have to see a break of structure. That is, you have to see a reversal. Now I'm just going to quickly show you an illustration of what I mean by break of structure, in case you don't really understand how it works. So for me to do that, I'm just going to pick up one of my tools here, maybe an arrow key. I'll just try and use something like that. Okay, perfect. So let me use this tool for better explanation. Now let's assume that price keep heading higher right here. Now, what you want to see is that if price keep heading higher at that point, you are to wait patiently to see something like this. You must see price reverse and break lower. That is, what I'm trying to point out here is that if price is going all the way up around this region, you must see price go all the way down, breaking this low. So let me quickly explain what I mean. I'm just going to draw a line here. Perfect. So what I actually mean is that this might be a low, right? So now, if this low, maybe price went all the way up somewhere around here, then came down, then went all the way up. So price must come all the way down, breaking the low. The breaking the low means that is likely to be what? A break of structure, that is a reversal. That might establish what? The beginning of a bearish market. Because if you look at what has been happening to GBPUSD, looking at the past, that I can see that it has been making series of higher high and higher low. So this reversal right here might be the turning point, and this reversal must be on a significant level. And I pointed out this place as what? A bearish a order block. So this order block might be a beginning to start pushing price lower. But if price just keep heading all the way high and you cannot see a break of structure, this might be the next place you should look out for. That is that fair look that I pointed out on the daily time frame. It might be a place you should watch out for. If we can see a break of structure, that can be where you can take as a you can take that as the beginning words of a bearish market. So you might be wondering, when price gets to that point, what do we do? How do we trade? Well, when we have a break of structure based on my own model, that is fair value gap, I use fair value gaps as entry. So when I see something like this break of structure, I'm going to find if I can, I'm going to try and see if I can see a fair value gap around here. So most of the time, at least 60% or 70% of the time, when we see a break of structure like this, we're likely to see a fair value gap around here. So what I just tend to look at is that, okay, when price eventually show me that fair value gap, I just have to wait patiently for something like this. Now watch carefully. I'll just have to wait for price to trade back up to the fair value gap. Now the fair value gap might be, let's say, somewhere around here. I'm just going to just draw a line here just for, let's just assume, it's an assumption. Let's assume that we have a fair value gap somewhere around here. So let's say this line is like a fair value gap. So now I expect price to trade all the way into the fair value gap, because I will have already placed a sell limit here and stop loss will be somewhere around here. So the moment price gets to this point here, my trade will be activated. Then hopefully we should start seeing price getting and being rejected from the fair value gap. So price might start heading lower. So now you might start asking me the how sure am I that when price gets here, I might start reversing? Well, the psychology behind this, or the logic behind this, is that when price followed the way down here, because of market was like in a hurry to deliver price. So most times when we have a value gap, markets want to go back to refill those places for they can have a continuation pattern. So now when price heads to this point here, if you are in this region right here, I already place your sell limit order. By the time it's activated, expect price to start heading lower. This is something I've back tested and it works. At least 80% of the time it works. So that might be how you can be able to take this trade in this region right here. Do you understand? So that is all for GBPUSD analysis. If you do enjoy, please hit that like button, share to your friends, hit that subscribe button, drop a comment. I really appreciate that, and I will see you in the next video. Peace.